JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 13th of October 2020, so yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now jumping into the charts, now the first one I want to pick up here is on Hang Seng. So the index here rallied nicely to the upside today, pushed away from its 21-day EMA and is now getting a hold up near the 100-day EMA. So previously, when I talked about Hang Seng, I was telling you guys to keep an eye on this, a few of these downside lines here. First of all, of course, the steeper one, short-term tentative one, taken from the high the 31st of August. And as you can see, last week here, it pushed away from this downside line, through this downside line, and pushed away further north. So yep, for now, everything seems to be on track of potentially testing this other downside line taken from the high of the 7th of July, and for now that's going to be my target. It also kind of is near the 200-day EMA, so basically all this could work out nicely. So for now, that's the kind of game plan that I've got here. So I'm currently aiming for this downside line and this 200-day EMA. If it wants to push further north, that's great. I'll reevaluate this again, but for now, that's the game plan. Shanghai Composite also had a wonderful move higher yesterday, also managed to stay above this 3,350 territory, and today, as you can see, initially it did drop a bit lower, but the bulls were quick to lift this one back above this territory, or actually I would say even just is currently sitting bang on this territory. So at the moment still the outlook remains more to the positive side, although we are trading slightly in the red today. However, the short-term outlook for me here is still more to the upside, because it could be quite interesting to see if this index might test the upper bound of the range where it's currently stuck in. So that's why for now guys, if you want to look at some lower levels, then probably wait for a move back below this downside line or below this 21-day EMA. I'll keep an eye on this downside line for now, although it got violated, but yeah, I'll keep an eye on it for now, because depending on how everything is going to be trading around the 21-day EMA, maybe this downside line will eventually be required again. So but for now the downside is slightly off the table. I am aiming for this 3,377 territory first, a break of which could open the door towards higher levels. Now jumping into another index here, in the German index, the German DAX. As you can see, yesterday it made a nice move here. I talked about this index yesterday in my morning video. And basically what I was saying, that if we get a nice break and the daily candle remains above this 13,116 territory, now this is where we could continue targeting the upside. Now if we look at the cash index and where it's currently trading at, you can see that the price is sitting at around 13,140 mark. So basically at the same level where it closed yesterday. So, but the most important is that it remains above this hurdle here, this 13,116 zone. So if it continues to trade above that, then yep, there is a chance for this one to kind of move higher again, and where my next target is the 13,263 territory, marked by the high of the 18th of September. For now, I'm gonna keep an eye on this one. And yes, like I said, I am more bullish than bearish on this, but if the price suddenly starts falling back below the 13,116 territory right here, then I will go for a bit of a maybe correction to the downside here towards the 21-day EMA, or even this short-term upside support line taken from the low of the 25th of September. So for now, keep your eyes on this, guys, and keep your eyes on this little hurdle near the 13,116 zone. Now gold. Now this one is an interesting one because, as you can see, continues to, or should I say, this downside line taken from the high of the 18th of August continues to provide decent resistance. And for now, you can see that the precious metal did drift lower. It made its way back down here and made its way back down all the way towards this 21-day EMA, which currently is also providing a bit of support. Now, if this 21-day EMA continues to provide support, now this is where it could become quite interesting, because we could see this one reversing and pushing higher, and maybe this time we could get that pop above this downside line here. And most important here, what I'm gonna look at here is gonna be this high of yesterday near the 1933 territory. So a nice good pop above yesterday's high, yep, would confirm a forthcoming higher high. That automatically would place the price above this downside line here, and yep, higher levels could be met. So if you're looking for some upside, well, wait for that confirmation break above this 1933 territory, or the high of yesterday. In terms of the downside, as I mentioned previously, that a drop below this 1877 territory would be required in order to consider lower areas. So for now, guys, yes, we will keep an eye on this downside line taken from the high of the 7th of August, and we'll if the price starts falling below it, and then also fall, like I said, below this 1877 territory. Now this is where it could become a little bit more interesting for these sellers. Jumping into another index, and this one is a dollar index. So yesterday I mentioned this one, and basically the idea is still the same. Still keeping an eye on this 92.79 level. If it drops below yesterday's lows here, then yep, that's the potential target to keep an eye on. For now, you can see this morning we are seeing a bit of a correction. Of course, keep your eyes on today's news as well. On today's economic calendar, we do have the U.S. inflation numbers coming out, the core and the headline year-on-year and month-on-month figures. So that's going to be quite interesting later on to see how dollar reacts to all that. If the inflation comes out much better than the forecast, then if the actual numbers come out much better than the forecast, then yes, there is a chance for the dollar to accelerate. But to be honest, if it shows up somewhere near the forecast, or near maybe somewhere even somewhere below or around the previous figures, then, well, I mean, this could still keep the pressure on the US dollar. So that's why for now, guys, yes, DXY is showing signs of a potential correction. However, don't get your hopes up yet if you're a bull, because for me, for example, to consider the upside now, I would like to see a push somewhere above this territory. First of all, of course, a break of this downside line, but then, and let me just probably adjust some of these levels here, guys. Now let me just remove this one and maybe recycle one of these lines or something. No, that's a bit wrong place. Let me just grab one of these. So one of these levels here, this is going to be the interesting one to watch, the 93.90 territory, roughly around there. So if we get a nice pop above this downside line, this could also place the price above that 93.91 zone as well. And then, of course, yep, higher levels could be met. The index could start moving further north, but for now, guys, it is how it is. It's still below this downside line overall. It's still below this 93.37 hurdle. So yep, there is still a possibility to see this one drifting lower, but we'll go short. We'll go slowly, step by step on this one. The next target here is the 92.79 zone here. So yep, keep your eyes on that one as well. Jumping into Ethereum, so the cryptos are pushing, or I should say have pushed nicely to the upside yesterday. So I talked about Ethereum in my morning video yesterday. So it managed to reach my target here. My target was this 395 territory. So we had a nice test of that area, and then the pair drifted back down. The pair, I mean the Ethereum against the US dollar. Here at this point in time, if you want to aim for some higher levels, wait for that confirmation break above this 395 zone right now, because again, as you can see, the crypto did travel higher, tested that area. This is the high of the 17th of September, and then failed to move above it and then drifted back down. However, it still remains not only above this 21-day EMA, but also above this 371 territory that I spoke about previously, the high of the 1st of October. That's why still there is a chance for this one to move higher. However, I would prefer to wait for a push above this 395 zone first, and then I could consider maybe a further move higher here. But again, like I said, this confirmation break is needed first. If the crypto somehow drops lower and falls below the 371 territory, keep your eyes on the 21-day EMA. But if that doesn't stop the slide, then well, we could go for a bit of a larger correction towards this upside support line taken from the low of the 13th of May. There we go. Now jumping into a few pairs here, and Aud USD. So I talked about this one as well recently, and well, to be more precise, yesterday in my morning video, what I was saying, guys, that to keep an eye on this downside line. And last week we had a nice rally here to the upside on Friday especially, and it tested this downside line, but this downside line provided resistance once again. Yesterday the pair tested that line again, but still was not able, the bulls were not able to kind of overcome it. The pair is now drifting back down, as you can see here, but in a similar fashion as gold, it is finding good support near this 21-day EMA. Now, if this continues to happen like that, if this 21-day EMA still is able to kind of hold the rate from dropping lower, then of course we could see a bit of a reversal here and a push higher. But still, as I've mentioned to you guys previously, that in order to aim for or in order to get a little bit more comfortable with the upside, wait for that confirmation break above the 0.7245 territory right here, which is marked by the high of last week, and then we could consider a move further north. Now, the fact that if it fails to kind of if the 21-day EMA fails to provide support and breaks, then yep, well, I mean, this could be not looking good here for this pair, and we could see this one drifting all the way here towards this 0.1797 zone, or even below that. GBP Aussie, so also something to keep in mind, to keep an eye on. And if I'm not mistaken, we already had some data from UK. So yes, the employment figures. UK's unemployment rate for August came out at 4.5, so that beats the forecast. So the forecast was already slightly on the higher side. The previous number was 4.1, the forecast was 4.3, and the actual number kind of came out at 4.5. So not very good result here for the UK's unemployment rate. However, the average earnings numbers did show up much better. So yeah, like I said, for the moment we can see that there's not much reaction here, especially in the GBP Aussie. The pair continues to trade above this short-term upside support line taken from the low of the 11th of September, and in a way where we can say that as long as this upside line stays intact, well, I mean, there is still a good chance for this pair to move higher. Now, again, I'll keep an eye on this one. I'll keep an eye on this 100-day EMA shown as the green line. And in a way, if it travels a little bit higher here but fails to fails to move higher, then there is a possibility maybe of seeing a bit of a correction. Now, another point here is that if it pushes above this 100-day EMA, the next good potential resistance level to keep an eye on is this 1.8288 territory, marked by the high of the 4th of September, or in other words, the highest point of September. You can see here back in the end of September, it also tested that level but failed to overcome it, and now this could be that next target to keep an eye on as well. But again, like I said, let's go step by step. First, let's keep an eye on the 100-day EMA here shown as the green line. If it overshoots it, then the next target is this 1.8288 zone. If you're a little bit more on the cautious side, well, of course, you could keep an eye on this barrier and wait for a violate. Oh, not this way, not this way. There we go. Let me just grab this one. There we go. So so you could wait for a break of this area here, a break of this 1.8288 zone, and then aim for some higher levels. This could be that cautious approach. This could be that careful move here, just because a break of this area would confirm a forthcoming higher high, and potentially more buyers could be joining in here. So that's why for now it's a very interesting pair, very interesting developments here. But if you're on the riskier side, then yes, you could continue targeting this 100-day EMA or then the 1.8288 level. But if you're more on the cautious side, then wait for a push above this barrier first. Now, USD Jpy. So USD Jpy, yesterday I've mentioned this one as well, and the pair drifted lower, found good support near this 105.30 territory, as I mentioned to you guys yesterday, and yep, continues to provide, this area continues to provide support. So I'm not going to say too much here, because the same game plan remains. In order to aim for some lower levels, we need that strong move below this 105.30 territory first, and then yes, lower levels could be met. In terms of the upside, a move back above the 21-day EMA here shown as the yellow line might attract a few extra buyers here, and we could see this pair moving for going for this for a larger correction to the upside towards this downside line taken from the high of the 24th of March. Euro GBP, so this one is working out nicely according to the plan that I talked about. Now, what I was talking about previously, just a quick reminder, basically the pair is still trading within the falling wedge pattern. Of course, these patterns tend to be bullish ones, as we know, according to all the TA rules. However, as I mentioned to you guys previously, that here when I was covering this pair, we had that pop, we had a move towards this barrier, the 0.9157, but we didn't really get a close above. We didn't have this daily candle remaining above this downside line, and basically for now that's what I'm looking for. I need to see a nice good daily candle remaining above this downside line, and then I could start looking at some higher levels. We only get these overshoots, so that's why don't rush into anything yet here. Yes, it is drifting lower for now, but also be very careful with this pair, because it could move further down. It could move below this 0.9025 level. This is, by the way, one of my targets that I talked about yesterday, and this got reached. This got tested yesterday as well. So now, I mean, the pair could drift a little bit lower. It could fall below this territory, but keep your eyes on the lower side of the falling wedge. Now, if that gets broken, if this lower side of the wedge gets broken, then of course we'll scrap the whole falling wedge idea and just try to find a new pattern here. But again, for now, that's what I'm looking here for. If we do see a reversal then to the upside, then wait for a violation of the upper side of the wedge first, and ideally the daily candle remaining above this upper side of the wedge, yep, could open the door towards higher levels. And finally, Euro USD. So the pair is correcting a little bit lower here. Of course, also keep your eyes on this pair later on when the US CPIs come out. Check your calendar for that. Yep, it could be quite interesting, because if the pair somehow is able to remain above that 1.18 territory, now it's trading slightly below it, but if it's able to stay above, get back above this 1.18 territory, now the bulls could have a nice feast here, and we could see the pair drifting higher. But if the pair somehow starts dropping below the 21-day EMA and below this 1.1696 zone, now this is where it could become quite interesting for the sellers here, guys. And yep, for now, like I said, let's keep an eye on this one. It could be quite interesting, but in order to aim for some higher levels, we need that daily candle kind of remaining above this 1.18 zone. So far, it was doing a good job, but right now at this point in time, we're seeing a bit of a correction here. However, yes, let's keep an eye on this area, this 21-day EMA. But if that all gets broken and the rate slides lower and falls below this 1.1696 zone, now this is where, like I said, I'll aim for some lower levels. So guys, I really hope you found it useful. Thank you very much for watching and listening. I really appreciate your time joining in here. If you want to catch my video later on, my trader's tea time, as always, 13:15 GMT. But for now, guys, I hope you have a wonderful trading day. Stay safe, and I'll see you later. Thank you very much, and bye-bye.